All right, let's talk about a legacy heavy-duty truck manufacturer that is quietly acting like a high-growth tech stock. I'm talking about PACCAR. Now, you might not know the corporate name off the top of your head, but you've definitely seen their trucks out on the highway, brands like Kenworth, Peterbilt, and DAF. Today, we're doing a full explainer on exactly how this industrial giant has been flying under the radar while delivering absolutely massive shareholder value. We're going to dig into the data, the financial statements, and the market catalysts driving this momentum.
So let's kick things off with a number that is just hard to ignore: 24%. PACCAR's stock has rallied an impressive 24% over just the last 6 months, trading right near $125 per share. And look, when you see a jump like that in a traditional heavy manufacturing stock, it absolutely demands a closer look, right? This isn't some volatile early-stage software startup. This is a massive, capital-intensive global manufacturing business that is fundamentally beating market expectations.
And behind that stock ticker are incredibly tangible products. Just look at this new Kenworth C580 vocational truck. This beast perfectly shatters the idea that the trucking industry is somehow boring. It's designed for the absolute toughest jobs out there, like mining and off-highway petroleum work. But the real story we're looking at today isn't just about the steel and the engines. It's about the financial machinery powering the creation and maintenance of these global fleets.
To give you a clear picture of this company's momentum, here's our roadmap for today's explainer. 1. The 24% rally. 2. Inside PACCAR's financials. 3. The 3 business pillars. 4. Electric and autonomous tech. And finally, 5. Their 2026 market outlook.
All right, let's jump right into part 1, the 24% rally.
So investors are responding really aggressively to 3 key drivers right now. First off, we're seeing stabilizing freight conditions. The US and Canada truck market is hitting a positive inflection point, as customers actually benefit from higher freight rates, which is happening because of reduced industry capacity. Second, there's much clearer regulatory visibility. Buyers finally understand the 2027 emissions cost impacts, and that's unfreezing capital and getting them to actually make purchasing decisions. And third, PACCAR is showing some massive structural profit expansion. Basically, the market is showing a lot of confidence that 2026 is going to deliver even stronger earnings as things normalize.
Moving on to Section 2, Inside PACCAR's financials. The numbers here brilliantly illustrate a decade of pure dominance. I mean, notice this huge leap from $19.1 billion in total revenue back in 2015 up to a staggering $28.4 billion in 2025. That is incredibly consistent long-term profit generation in an industry usually famous for its boom and bust cycles. And they aren't slowing down. In just the first quarter of 2026 alone, they pulled in another $6.78 billion in consolidated revenues. This isn't a fluke. It is systemic, highly engineered growth.
But honestly, revenue is only half the story. That top line is fueled by extreme capital efficiency. Just look at this, a record 55.5% return on invested capital for 2025. Just think about that for a second. For every single dollar PACCAR reinvests into its business, it generates exceptionally high profits. It goes to show that they aren't just moving metal around, they are incredibly disciplined with their cash.
So how are they actually doing this? Let's look at Section 3, the 3 business pillars.
It really comes down to this 3-pillar engine. PACCAR isn't just a single business. It's 3 distinct, highly complementary revenue streams that lock together. This creates incredible stability, even if the manufacturing side hits a speed bump. We've got truck manufacturing, PACCAR parts, and PACCAR financial services. Let's break those down.
Pillar number 1 is the physical fleet itself, represented by trucks like this Peterbilt Model 535. Now, in 2025, PACCAR delivered 144,200 trucks globally. They build premium vehicles across light, medium, and heavy-duty categories. Again, under those Kenworth, Peterbilt, and DAF nameplates. This is the bedrock of their brand and market share. But here's the thing. Selling the truck is literally just the beginning of the revenue cycle. And that brings us to their famous razor and blades business model. The manufactured trucks, those are the high-volume razors, but the aftermarket parts act as the highly profitable blades. Think about it. Once PACCAR sells a truck, that vehicle is going to need maintenance, replacement parts, and servicing for the next 10 to 15 years, and PACCAR captures all of that recurring long-tail revenue.
To give you a sense of just how lucrative those blades are, in only the first quarter of 2026, PACCAR parts pulled in $1.71 billion in revenue, generating over $402 million in pre-tax income. That operation is supported by 21 global distribution centers covering over 4 million square feet, plus more than 350 TRP parts stores worldwide. It is a super high-margin, defensible business that perfectly smooths out any cyclical bumps from just selling trucks. Then we have the third pillar,
financial services. This acts as the ultimate stabilizer. PACCAR Vice President Craig Grinuev directly attributes their strong quarterly results to their high-quality portfolio. Basically, PACCAR Financial Services manages a massive $22.3 billion asset portfolio of over 221,000 trucks and trailers. Because the company boasts an A+, A1 credit rating, they have unbelievable access to debt markets. They issued $400 million in notes in early 2026 alone. That lets them offer really competitive retail financing to customers across 26 different countries. They're essentially running their own highly profitable bank.
All right, shifting gears to the future. Section 4. Electric and autonomous tech.
This massive technological shift is perfectly embodied by the DAF XF electric truck you see here. And this isn't just some concept drawing. It's out on the road right now, and even won the 2026 Eco-Friendly Truck of the Year award in Spain. DAF has heavily expanded its battery electric lineup to include models specifically built for tough vocational applications like construction.
They are heavily future-proofing their business right now. These EV trucks are pushing zero-emission ranges up to 300 miles, depending on the duty cycle. And they are backing this up with serious capital. PACCAR poured $1.2 billion into capital projects and R&D in 2025 alone, and they're expecting to invest over $1.1 billion more throughout 2026. All that money is going straight into next-gen internal combustion, hybrid, and battery electric powertrains, alongside their autonomous vehicle platform. They aren't sitting around waiting to be disrupted, they're actively funding the disruption themselves.
Bringing it all together in Section 5, the 2026 Market Outlook. Driven by stronger demand, easing regulatory uncertainty, and an expanding backlog of orders, leadership is anticipating a highly lucrative year. CEO Preston Feight said it plainly. 2026 should be better. They're estimating that U.S. and Canada Class 8 truck industry retail sales will land comfortably between 230,000 and 270,000 trucks this year, with Europe projected to hit up to 320,000 trucks. The macroeconomic stars are really aligning for a remarkably strong cycle here.
So here is the crucial takeaway. PACCAR uses their high-volume truck manufacturing to build a massive installed base. That base feeds a high-margin parts division, which then generates the cash to fund aggressive electric and autonomous innovation, all while they offer competitive in-house financing. With a self-sustaining, deeply resilient engine like that, you have to ask yourself, is this the most compelling long-term stock to hold in heavy manufacturing? It is definitely something to think about the next time you see a Kenworth or a Peterbilt rolling down the highway. Thanks so much for joining me for this explainer. Keep learning, and I'll see you on the next one.